Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Friday, November 4th, 07:17 a.m. New York time. Good morning. It's a recap of my trade overnight. I traded in the futures market overnight, and I traded options in the futures overnight. That requires you to have an account with a broker that lets you trade futures as well as options. The futures I traded were the S&P 500. That symbol's /ES, and there's options on them. You can trade these all night long and during regular market hours. It's a great product. So we're looking here at three grids, three different time frames. On the far right, it's a daily chart. The middle chart is the 4-hour, and the left is the 1-hour. What that means is each current candle represents that time frame. So on the far right, this current candle, this yellow candle, is a daily candle. So it won't be done till 5 p.m. That's right, I said 5 p.m. That's 5 p.m. New York time. The futures markets close at 5 p.m., where the stock market closes at 4 p.m. So because it's a yellow candle, I have a program or represent, it's an inside candle. What does that mean? It simply means it didn't take out the high or low yet. So if it closes with inside the range of the prior high or low, it stays yellow. If it breaks out of it, well, it goes to the color, the direction it breaks out. Look at this one up here. Little candle, yellow, inside. Yep. So again, example, it never took out the high or low of the prior candle, so it closed yellow. It's a solid body because I have it programmed to represent being red, meaning that it closed bearish. Where if it's a hollow candle, there are no here on the yellow ones, but if it closes hollow, like these green ones, it lets me know it closed green. Yeah. Okay, so we're currently in a consolidation. We're in a consolidation because we haven't taken out the higher low of the prior day. It's consolidation. Where here, it's a trend. This trend was down, making lower highs and lower lows. First, if it's going up, well, here, lower highs and high highs. That's a trend. Got it? Looking here on the 4-hour chart now. That's in the middle. This current 4-hour candle will be done at 9 a.m. New York time. It started at 5 a.m. This is a trend up. Look, higher highs, higher lows. Down here, this green area, I label green because it's a demand zone for me. It showed me there were buyers down here. And up here, I have these red horizontal lines. That's where sellers were in the past. So right now we're breaking through that. Let me zoom in a little bit more. Yep. So last night and yesterday, regular trading hours yesterday, we had this form, this big green candle, long wick on the bottom. Some people call them wick, shadows, tills. When that was formed and completed, I labeled this as the demand zone because a huge wick on the bottom. I was seeing that as potential retest, not knowing it was necessarily going to be coming to a buying zone a second time. All I know is that I'm expecting some point of retest. We came back down here. Well, okay, here too, we had an inside candle. So we were building a consolidation over here. The inside candle, smaller trading range, it didn't go in and retest all this wick. So when that completed again, I said, let me extend it out. And this candle here, this one, that started at 5 p.m. Look how small it was. Small. It did go in and test this demand zone, small little wick. And this candle here, starting at 9 a.m. sorry, 9 p.m. So this 5 p.m. that got done at 9 p.m. When that got done, I was thinking, yep, I'll take the risk here. I'm going to go long. Long, that's bullish, meaning I'm looking for price to go higher. Why? Because again, we're testing this demand zone where buyers were, and that candle was forming a small trading range. It was green, it wasn't red, had a small tail on the bottom showing that there was more buying on it, buying in that because every time it would dip in that time frame, buyers were pushing it back up. Yep, so I went long at 8:03 New York time. And the momentum continued going to the upside. That's good for me. I didn't stay in the trade. It was a trade. I put it on. Once I got in, I put a working order to close for a profit. So now here on the 1 hour, this grid on the far left, 1 hour, each of these 1 hour. So again, that green candle is where I got in 3 minutes after it started. I like that candle down here. I'm going to zoom in so you can see more. We had the inside candle here. Yellow, broke out to the upside. And I put my long on because look at that red candle, huge wick on the bottom, small body. Yellow inside candle, consolidation, broke out to the upside. It was a reversal. And we were also testing this demand zone where buyers were. Yeah, I take it from the higher time frame, drew this on the higher time frame, and then I'm looking for entry on the faster time frames. You also had here huge wicks. Like a tweezer bottom down there. And then here the momentum didn't continue. The momentum changed from down to the up after this green candle took out that high. Not when it got done. As soon as we took out that inside candle, it already made a higher high. And then I was hoping the momentum would continue to the upside. And it did. Made a higher lows, and the momentum went up. And that's where we are right now. Yeah, you see prices moving because the market's open right now. Again, the futures are open right now. You can trade right now. If you have a futures account, you don't have to wait for the stock market. So this vertical line, this gray vertical line is where I got in at. And I'll show you where it closed at. My trade closed at 12:50 p.m. last night. Let's label this 12:50. So that'd be 2,400. Double check it, make sure it defaulted right. Nope, it didn't. D4. Let's just do this. Okay, that's good enough. I think that's how it has to go. Yep, so that's where I closed the trade at. Again, placed my order there as soon as I got in, closed it. Put a working on a close. So nice, it worked out. And look, it's higher. So if I stayed in longer, I would have had more gains, bigger profits. Let's go look at the option chain. So again, this is an option chain. The contract I traded was in November. That expires today. The 22 just means the year on this platform. So the month was November, and the expiration, you see 0 here. That means it expires today. And I traded bullish. I did advanced strategy called bull put spreads. They're also called vertical spreads. There's different kind of vertical spreads. There's debit and credit. I did a credit vertical spread. Yep, credit. And I used puts to it. My short strike was a 16 delta originally. So my short strike, these are strikes. I chose the 3660. And originally when I did it, this delta column was 16. Now it's 7. That's in my favor. It's in my favor. Sold that one and bought the lower one. I bought the 3645. So when I sold them and I collected a credit. So when I collected the credit, originally this was at $230. Yep, $230. But you got to multiply that by 50 if you know how futures work. But I'm not going to discuss all that in the video. The premium was $230. And look at it, melted away. That's what you want when you're doing credit spreads. Melt away. When you're doing debit spreads, you want the value to go higher. So when I closed it at 12:50 p.m., this was 170 premium. Again, I got filled at 230, I collected 230, and it melted down to 170. So I had profits, winner. Again, if I stayed in it, I would have made more. There's risk thing and things longer. Trends reverse. Let's go look back at the charts. We'll look here on the 4 hour. going to show you the strike. So my short strike in, I told you it was 36.60. So it's all the way down here. Yellow hours when I got in, green hours when I got out. So I reduced my risk by being further away. Yeah, if prices went lower today, and if I was still in it, as long as it stays above that area, you could win. But again, why I had it beneficial me because the trend went this way faster. Yeah. Okay, let's do this now. Oops. Show you a little bit bigger picture so you understand some more. Just real fast there. Understand the 36.60 is all the way down here. All the way down here. That's a short strike. So that's why my short strike was down here. I had these key levels. See these horizontal gray areas and horizontal green areas. Those are key demand zones I labeled in the past. And I was saying, hey, if that's going to be my battle line, my battlefield, hold the line, I'd rather have my short strike below it. So there's more support. So if prices come down there, maybe it won't break below those. Maybe that's where it's going to pause and reverse. So I took risk. If every position trade, you're taking risk. But the point is, again, I chose a short strike, 36.60, all the way down here. That was below these key levels. Again, this key level, what I determined as a demand zone buyers here, potential retests, but also potential reversals off these areas. So picture all these as trenches, moats, barbed wire, landmine, defense applications. And again, they didn't get tested, all of them. None of them really got tested because it was already in here. That's that one. But these, so again, I gave myself more of an edge. Yeah. First, if I was just going to put it in an open area, look here, all this space. If I was put one in here, that's a lot of risk on the upside, downside. Okay. And let's look at this on the 15 minute. 15 minute. I like the 15 minute too when I'm trading faster time frames. Overnight, remember, I got in here. So you look at these 15-minute time frames. Remember, the Asian session starts at 8 p.m. New York time until the U.S. changes its clock back. But again, all this was consolidation. I like consolidation. We had the impulse move breakout, and that was my entry right in there. And you can see as we're going during the Asian session, it's consolidation, breakout to the upside, consolidation, breakout to the upside. Coming to the London session, momentum continues. But you notice this big steep retracement? Yeah. That could have continued going and going lower. So again, another reason I'm putting on working orders to take profits fast. And now we broke above 37.50. So this was resistance. I'll zoom in again. 37.50. Yesterday was huge resistance. Majority of trades were closing below 37.50. That was resistance, a selling. Today, this morning, we broke above it. And when we broke above it, came back and tested it and holding it. Yeah. What do I think is going to happen at the end of the day? Well, maybe the end of the day, we're going to be back below here. Yeah, I'll be using caution if I'm going to be buying up here. Nope, I think I might be looking at short. Maybe looking at short. We'll see how the day goes. Okay, many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.